Good morning everyone and welcome back to Morning Markets here at True Potential. It's Thursday the 14th of March. Today we're going to take a step away from commenting on data and reflect on the global equity market. So what is driving equity markets at the moment is renewed optimism on growth. The outlook for the US is unchanged, growth being driven by strong employment and a fiscal initiative which is supporting consumption from households and investment from corporates. And of course, outlooks for recession from both the UK and the Eurozone have largely been binned. Recall that it was inflation which was driving markets over the last 2 years. Well, it's now renewed optimism on growth for the UK and the Eurozone ahead. And the starting point is much lower here. We were in a sort of recession with GDP contracting for consecutive quarters, but it hasn't really affected employment trends in either the UK or in continental Europe. So let's dive into markets away from the US and reflect on equity performance there. It's easy to think that the best performing market over the last 12 months has been the US, but that would be ignoring Japan. Japan is undergoing a fundamental sea change in its attitude towards domestic investors, such that the Nikkei, the main index there, is up over 15% year to date and 35% over the last 12 months. And that's because Japanese corporates and the boards which manage these companies are finally getting round to unleashing 30 years of value for investors. And that's really reflected in that it's not Japanese growth names which are driving equity market performance, but Japanese value names. These lowly valued companies are finally getting round to trying to improve their multiples for their investors. Similarly, in the UK, it's the unloved sectors which have been driving much of the performance over the last 12 months and year to date. The Eurostoxx 50, in fact, has outperformed the US this year, and it's Eurozone banks which have been driving this outperformance. And of all the places to be driving the outperformance within the banking sector there, it's Italy. Italian banks are up 25% over the last 12 months, reflecting renewed optimism and better shareholder returns there. And all of True Potential portfolios have benefited from these diverse views across Europe, Japan and the US. But of course that leaves the UK. Unfortunately, our main equity market, the FTSE, is flat year to date and has only delivered about 0.5% over the last 12 months. And within the FTSE, it's only 8 sectors, 8 of the 11 sectors are down over the last 12 months, with only 3 being up, those being healthcare, industrials and IT. And in fact, whereas value names in Japan, the Eurozone and the US are up over the last 12 months, they're actually down in the UK. And we're seeing negative performance, not just from large caps, but from small caps as well. So perhaps it's the equity market right now which is best reflecting the rather dire outlook for the UK economy. And it might not be enough for a change of government here to change investor sentiment towards our own domestic equity market. However, the benefit of being diversified in our portfolios is that our clients have been able to capture the positive returns from the US, from Europe and from Japan over the last 12 months. That's all for today, but please join us tomorrow for our Week in Markets review. Thank you very much.